What are the highlights of Tata Arbitrage Fund in terms of clocking performance?
So what has also led to our performance is basically we have had a portfolio approach in managing our funds. For me, if I really put into a stock, what is really critical is that to look into the market cap where I'm deploying. So what I mean by that is that there could be a large cap, mid cap and small cap, as everybody knows. Large cap is for the first 100 stocks, mid cap is basically anything from 101 to 250th stock, and anything below that is a small cap. Now for me, what is critical is to understand that which market cap is in action now, which means why? Because one, it ensures that there is liquidity into that part, and second is the cost of carry is better in that particular market cap. Higher the action in that, basically that leads to movement in the cost of carry or the spread during the month, which means I can exit my position early and reinvest. So that is very critical when I look at investing into a particular stock as far as the ARB is concerned. The second thing what I look at is also the sector and the stock which are in focus. So for me, I have to ensure that I get always deployed I deploy most of my money in terms of the opportunity into sectors or stocks which I personally believe will be more volatile or where there is more action during the month. If I am invested into a stock which is more in favor or in action, one, the cost of carry is higher, or I get an early exit during the month, means I can reinvest my capital twice, thrice in the month, in the same month, and enhance my return. The third most important part also is the corporate actions, which means the dividends. It could be either mergers, it could be rights, or it could be bonuses. The point is that these are the opportunities which don't come regularly, but they come once in a quarter. So if your assessment of a company is right by looking at the cash flow or the balance sheet or the businesses, and if you can assess correctly the amount of dividends which it will be paying, and if you are putting in a trade, again a trade which is a hedged trade, which means you are completely hedged, your equity shares is hedged with the future, that dividend earning of the stock is actually an added profit to you, and that enhances your return. This is how the differentiation for us versus the peer is all about.
So market cap movement across market caps, identifying stocks which where the spreads could have narrowed down, and corporate action. These are the three sources of returns apart from the rollover spreads that you mentioned.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.